invest into systems and processes out of the gate. Do not, try to just roll with the punches because it's not efficient and you need that efficiency. And the more you have that process in place, the easier it's going to be to scale up.
Veena, welcome to the show today.
Hi, Michael. Thank you so much for having me. I'm so excited.
I'm so excited. It's been a long time. I don't know why it's taking us for this long to get you on the show, but podcast is a great way to catch up, and that's what we want to do. So give us a little background on yourself and kind of what brought you to this point.
Yeah. So I have rolled out a company called Vive Funds. I, rolled it out mid-COVID because that was really the best time to make a drastic life change, was right in the middle of a global pandemic. But it served us really well. We've bought over $250 million worth of assets in the Atlanta market. And we focus on Class B value add multifamily in Texas, Florida, Georgia, North Carolina, South Carolina, and Arizona.
Also Hawaii and Alaska. Yeah. You guys are in. You guys are in a few markets. Yeah, that's pretty cool. Well, how did you get started with this stuff? I mean, obviously you've been doing this for a little while, but how did you get into it?
Yeah. So I took the shortcut in. I totally cheated because my mom is a very successful real estate investor. So I grew up in this world. I have been around it my whole entire life. Probably before I could even walk, I was at closings and touring assets. So
that's cool. It strikes me when I read the Donald Trump book, The Art of the Deal. He obviously also grew up with a family. His dad was a real estate investor, but and so that gave him a leg up, of course. But the man thought at a much higher level than his father did. Are you thinking at a higher level than your parents as well?
I don't know if I would say that. My mom is a very smart person. I've learned a lot from her. I think the difference is they were immigrants to this country. They came here with nothing. They came here with no credit, no safety net. Whereas I had a lot of latitude to take on significant risk that I was all right, well, if I lose everything, we'll move back home or my parents will pay the mortgage. I had a pretty big safety net to be able to take on more significant risks. So I think I just can look at scale a little bit different. And, my kids, I want them to be able to take on even more risk than I could because they don't have to worry about what happens if they fail.
I think the work ethic is super important. I think that's the common thread of anyone who's successful, real estate or otherwise, is the work ethic. And I think that's so important. How do we instill that in our kids? And your parents pulled it off with you in some way. And, so that's pretty cool. And now you guys, how many units do you guys, what is the size of your portfolio right now?
So we've transacted on my total portfolio just over 600 million. So somewhere north of 3,000 units.
Yeah, that's pretty cool. Give us a sense for the team. What's the makeup of the team? Because it's probably not just you at this point.
Yeah, no, it's not. I wish I could take all the credit for what we've done, but I really would be doing a disservice to our awesome teams that are doing everything behind the scenes. So at the partnership level, it's myself, and actually my sister is a partner in our company too. So she's also followed the footsteps of my mom. And then we have our third party teams, which are also really critical. And I don't know that we'll ever pull them on board internally. It probably doesn't really make a lot of sense, but that's our tax strategist, our attorneys, our securities attorney, very, very, very important. We utilize those teams pretty heavily. We have our administrative coordinator, we have our asset managers, we have underwriters. So our team is fairly extensive at this point. We have someone that kind of heads up each little section, and then we focus more on the higher level and the strategic piece of the business at this point.
Well, let's talk about that because, as we scale, we're always asking the questions, how should we spend our time, right, Garrett? I mean, the three partners are should we be in the weeds? Sometimes we need to be in the weeds, but we really want to be more on the strategy level. So you guys have actually put a lot of teams in place to handle some of these things. So how do you and the partners spend their time? What is the most valuable way you can spend your time right now?
For me, it's on strategy around acquisitions or capital and legal structure. Those are, I think, the big three. And I spend a lot of time in those because I enjoy those the most, if I'm being totally honest. Those are my favorite parts of the business. I do still take a lot of investor facing calls. All my investors, they have my cell phone number, they text me, they call me. And it's hard to scale with that, but it's something that I think has really been important to our business.
So Veena, from what I know about you, you've really kind of gone to the highest level as far as capital raising goes. And not a lot of people get to the level that you've been able to achieve. What do you attribute to that? And what do you think is really the makeup of your reason for going to that level? Because I know there's a ton of people listening that are like, man, if only I could raise, more money. You've figured something out.
Yeah. So I hope I'm not at the highest level, because that means that I'm like just done. I can just walk away right now.
Grant Cardone is at the highest level. Okay. I want to be Grant when I grow up.
Yeah, he's definitely raising capital. Well, and he's switched to like a Reg A raise now. So he's taking in smaller investors, and he's really catering to people that wouldn't otherwise have access to these opportunities. So with that being said, I think there's a couple of things that have been really important and really instrumental to us having the success that we've had with raising capital. One is we are very investor focused. Every single decision we make in the portfolio, whether it's updating the website to making monthly distributions to sending out content, every single decision is made with how does this affect the investor and how does it affect their experience with us? So we really strive for that white glove experience. Secondly, we pay a lot of attention to our retention rate of investors. So I want to see investors that are really here to build a long-term relationship with us. They reinvest with us. About 80 to 90% at any given time of my investors are in 2 or more deals with me. And that's very important to me. And then, of course, I know we're doing something right when I start seeing the referrals of friends and family coming into our investor database.
That's interesting. So you just said reinvestment, and then you've launched a fund. And from what I've heard, it's more difficult to get investors into a fund to reinvest. So how are you guys overcoming that?
Yeah, so it definitely is challenging. And the thing about funds and diversified asset funds, like we have Rev Fund 1 is what we launched. It's a $100 million value add fund. The challenge that you have is there's a lot of roads that lead to Rome, and there's no necessarily clear path that's like, this is hands down the best way to do this. So you kind of have to like pick and choose what you think your investors will do. And so for us, we have investors that reinvest through the fund, but we also offer direct offerings on our assets. So it's not an either or. A lot of times it's a both. And the investors that invest into our fund or re-up, they're the ones that want diversification across their investments. They want the set it and forget it. They don't want to be picking and choosing and evaluating every deal. They're like, Veena, I know I'm going to invest X amount of dollars with you. I'm going to put it in every quarter, every 6 months, every year, whatever that is for them. And so they just continue to reinvest and increase their investments. And also, when they're seeing returns and we're delivering, it's a lot easier for them to make that decision.
Now, why are you giving 2 options to investors? That's interesting. I mean, sometimes, you don't want to give people too many options.
Yeah, it's definitely been like an interesting dynamic. And one thing I did not at all expect was having a lot of our investors that said, oh my gosh, I love this asset, Waterstone. I want to invest into that. But I also want to be in Rev Fund because I want to have the diversification. So they are actually putting, one investment here and then another investment there. I totally did not expect that. But we gave people options because Rev Fund was really born out of demand from our investors. They wanted a way to set it, forget it, know how much they were going to invest on a yearly basis into our deals, and also be able to be diversified across multiple assets. They didn't want the risk of just any one asset.
So tell us a little bit more about what you're doing with the investors to achieve some of the goals you mentioned: the retention, the reinvestment, the referrals, the white glove treatment. What are you doing with your investors? Like, what are some of the best practices that you're following? So
the biggest tip I have for anybody trying to raise capital effectively and efficiently is, 1, raise your capital when you don't have a deal on the table. So when you're in between deals is the best time for you to raise capital. I know it sounds counterintuitive because you're like, I don't have anything to pitch them, but you're not. What you're doing is you are going through who you are as sponsors, your general strategy, your business plan, making sure they understand and can vet you so that by the time you do have a deal, all they're doing is they're vetting the exact opportunity in front of them. Because, we have to raise $30 million in 42 days. I cannot go and take individual investor calls and make those calls in the course of that 42 days and still be funded. So when I don't have a deal on the table is when I start raising our capital.
Yeah, the thing is, I mean, you have built a substantial business. And I think the message to everyone listening, watching this is if you're in syndication, you've done your first deal, you're about to do your first deal, you are literally embarking on a multi-million-dollar business. Now, when I first got started, I did my first deal. I wasn't thinking I'm going to do a multi-million-dollar business. Like, right? It didn't even occur to me. It was like, well, let's just do a deal and see where it goes. Oh, well, let's do a second deal because the first one went okay. Oh, let's do a third deal. Like, and so I don't know. I just Garrett, I don't know if in your experience, but it's like, and then we do these things and then we create problems for ourselves and we solve the problems. It's like we're always in like reactive mode. And I'm curious if you could go back to your younger self. What would you advise yourself and your partners that maybe you should pay attention to earlier on?
Invest into systems and processes out of the gate. Do not, try to just roll with the punches because it's not efficient and you need that efficiency. And the more you have that process in place, the easier it's going to be to scale up. For example, if we're talking about capital raising, right? When we have a very specific, like I have a calendar written out of on this date, day one of an LOI, these 5 things happen. On day 3 of an or after the LOI, this happens. As soon as the PSA is done, this happens. So I put all of those timelines in place so the whole team is operating under the same assumption. Now, of course, it changes deal to deal because it may not be 3 weeks of due diligence, it might be 4 weeks. And so we adjust as needed per deal, but generally speaking, everyone knows what the workflow is. We also have a very specific way that we implement our documentation, for example. So that's the other thing. Our investors, they know what to expect. They're not being thrown into the middle of a new process every time we raise capital. It's the same. And I always joke and say, like, we're really boring investors. We're super vanilla because we do the same thing over and over and over and over. And that's all we do. And so our investors get comfortable with the process and maybe we enhance it a little bit by introducing, DocuSign. We use Power Forms now to let PPMs get done faster. And we send them the links and then they can go in and read it at their own leisure. They can forward it to whoever they need to, their attorneys, whatever. So that's like another system that we put in place that we didn't have in the beginning. And I think that those little tweaks, and it can be anything, just start setting them up right away. Don't wait until you need it, because then it's much harder to put it in retroactively, like you said.